Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is forex trading live market analysis, and I'll just take you through what's coming up from me this week. So tomorrow I'll be going through price imbalances. That's part 3 of Introduction to Smart Money Concepts, 8 p.m. Sydney time tomorrow, Wednesday the 17th. And then on Thursday, live forex market review at again 8 p.m. Sydney time. So that's what's coming up from me this week. So everybody, please, if you could read through the disclaimer. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us. In the webinar, I've given you a link there. For those in the webinar, if you can read through the disclaimer, and if you have questions to the chat box or the Q&A box, I've got both open. So just take the time to read through the disclaimer before we move along. All right, we'll move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time forex trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. And through the week, you can connect with us on the website, acy.com, go to Market News tab, or our YouTube channel, ACY Securities Australia. If you want to connect with me personally, just head over to my Linktree page. You'll get my social media connections there. So I'll just leave that on screen. If you want to connect, be it at our website or with me in person, just jot something down there. And while you're jotting that down, if you want to get access to my webinars, so my MT4 webinar chart layouts and templates, then just contact Nathan.bray. I'll put his details in the chat in a moment. So my chart layouts and templates, just contact Nathan at ACY Securities. And while I've got that on screen, I'll just put his details in the chat. If you need help with a demo account or a live account, you want to get my chart layouts and templates, then just contact Nathan. He'll only be too happy to have a chat with you. All right, there's his details in the chat. All right, so let's get into what the market's doing. First up, we'll have a look at the news coming out. And at forexfactory.com here, so I just want to make sure this is up to date. Time is shown in my time, Queensland time. So I might need to adjust the time for you. So we're into Tuesday at the moment. So for anybody trading pairs with the Canadian, we've got the interest rate decision, beg your pardon, we've got the inflation data coming out, which of course will bode for the interest rate decision from Canada through the course of the month or whenever the next interest rate decision is coming out. So we've got the CPI month on month, median CPI year on year, trim CPI year on year, and common CPI year on year. And not expecting too much change there. Just looking kind of maybe it may just tick down a 0.1%, which is nothing. So if that comes out a lot different than anticipated, so they're going to be very bullish or bearish for, say, for example, the dollar Canadian, depending on how it comes out. If it's a higher figure, that means, for example, the dollar Canadian should go lower because the Canadian should strengthen and vice versa. All right, so getting into tomorrow morning, 1 a.m. Queensland time, Bank of Bengal Gbpjpy speaks. And then with the pound speech here, he may be referencing the fact that the CPI data is coming out later in the day. I know last week, I think he spoke and was suggesting that inflation is still maybe a difficulty in the UK. So CPI is expected to come out tomorrow evening at 5 p.m. Only saying it's going to downtick 0.1%. So if that comes in nowhere near what we're expecting, that's going to be very volatile for the pound. At the moment, it's been heavily selling off over the last 24 hours. And then tomorrow evening, 11:30 p.m. for the US, we've got core retail sales and retail sales. And then into Thursday, we've got the Aussie employment change. And later in the week, US dollar employment claims, 11:30 p.m. on Thursday. And more UK news, 5 p.m. retail sales. And into the early morning of Saturday, prelim UA consumer sentiment. So over the next 24 hours, you've got the Canadian CPI data coming out for 5 hours from now, about 4.5 hours. And then, of course, the Governor Bay speaking in the early morning. All right, I missed one there. 12 p.m. tomorrow, we've got China news. So industrial production year on year. That can definitely affect crosses such as the Aussie crosses and the New Zealand crosses. So be aware of that as well. So just head over to forexfactory.com and keep yourself up to date. You know, I'd be at least 2 days ahead of myself. I like to review it at the start of the week so I know exactly what's going on and I can see where particular currency pairs could be impacted through the week. All right, let's get into the charts now. I want to go to the dollar index first of all. And it's very bullish today. Opened up and we're at the high of the move up at the moment. So I've been discussing the possibility of a inverse head and shoulder pattern here. This is the monthly chart. And if nothing changes at the moment, we're halfway through the month, we could be starting to see that pattern come to fruition. Weekly chart, it's had a reversal and then we're in the third positive week up since the reversal. All right, taking out the high or trying to take the high out of 2 weeks ago. So it's looking bullish at the moment. There's an area of weekly resistance that we're heading towards. So this week, can we come up and test 103.60 and how does the market react there? That'll be the thing to take note. That's the reference point. We're getting support down here at 170. What's going to happen at 103.60? All right, that's the level to watch and reference. Putting in two higher bottoms here, right a higher top, testing the most recent high. So it is showing bullish nature at the moment. Have we put in a significant bottom down here? We'll have to wait and see. Now, the S&P 500 is maybe forming some kind of failure up here. From a very large scale, on the monthly chart, we're just fractions short of the all-time high. Weekly trend is up here, but it's just asking the question on the day chart. It's not wanting to move or hold above that high there at 47.96. And we can't actually trade at the all-time high. So we could actually be dealing with a failure up here. If we've got a little mini double top forming here, it's already confirmed your entry on the break of the inside candle. That starts to confirm the possibility of a double top. So if we do have a double top forming here, just underneath the all-time high, then the target would be, so there's a double top I destroyed in. Target would be down here, the 200% price projection, around about 45. Can't read the number. A few overlaps there. It's around about 45.27. So we can monitor that to see how it starts, but it is looking like it's wanting to turn over. Broken the inside candle of the day before, stop above the high, and then are we going to continue down? All right. Let's have a look at the euro dollar. It's at the bottom of the day at the moment. So we've also done the range of the day, just met the projected low. So let's just have a look at the daily chart. It's been rather range bound since the job figures. That was a job figure high, and that was the job figure low on the Friday of job figures. And we've been inside that range. Folks broke it last week, but heading down towards the low. So, and the Aussie dollar's already broke its job figure low. So this is looking bearish. I was hoping it would come up and fill some of this area here. So you could maybe sell a higher up, but of course that's not happening. So just move down to the weekly chart. I'm anticipating, been saying this for a while, that we've had this move down. We come up to the 79% level. That was a monthly high over here. So are we forming a left shoulder head, right shoulder here for a long-term move down. That's what I'm anticipating. So then can you sell a rally somewhere to maybe hold a position for that kind of pattern? All right, so at the moment, it's not in a great area to sell because you're coming into this low here. So I should really put a line on that. 108.76. So 108.76 could hold a support. We could reverse back up from there. So if you're more bullish this pair, that's the level to watch for price to stall at to the downside. So you can monitor 108.76 to the downside for a hold. But for me, it's more a question of selling a rally. We don't know if we're at the bottom of the move yet, but we're definitely overrun. We're at the low of the day. We've already done the range for the day. So for me, I'd be drawing a fib across the 4-hour range and waiting for some kind of rally. Looking for a rally back up to, this keeps moving down. I'll just keep dragging the fib down, but looking for a 62 to 79% retracement. For it to turn over, and can I see an entry on a lower time frame to get in? So looking to, just sell an obvious rally. All right. At the moment, it's not in rally mode. It's at the bottom of the move. So just have to be patient. I'm never going to sell it at the bottom of the move and not so close to support here. Now, we could simply come down to support at 108.76. And on a 15-minute chart, you could see a nice, if you're more intraday, if we got down to supports, you could be looking to trade up from supports, allowing price to rally, and then look to get out at the top of the rally and then maybe getting back in to go short as the rally finishes. So at the moment, looking for a rally to occur at some point. All right, Euro Yen. Now, I've been monitoring two ranges. There's this larger range from high to low. We're at the 62 level. Let me just get rid of that other fib at the moment. So if we go to the weekly chart, we're at the 62% retracement of this decline to a lower bottom. Coming back up, this could be a left shoulder over here to the left, this weekly high. And now we're forming a right shoulder here on the weekly scale. Round about, well, it's been up to 160.05, the 62 level, and the weekly resistance is at 159.75. Now, at the moment, the trend is still showing to be up on the day chart, high bottoms and tops here, but where we're at right now, we could form a lower top at the weekly resistance level. We're tested it yesterday, and we've been a fraction short of it today. And what I have been looking at as well is the range of last month. So I just go from the high of last month, which is here, to there. And with 79% fib of last month's trading range. And yesterday we tagged that weekly high. And since then, all the 4-hour candles are a little bit short. So are we holding at or fractionally below 159.75, the weekly high, which could be the left shoulder on the weekly chart? Now, what I did notice as well is that this dropped down. We've traded up to 79% retracement, so we could well be, at the moment, we've moved down to a lower bottom, first of all, then come up to 79. Are we starting to head down like so? Are we actually holding here and starting to turn the ship on the 4-hour chart? So at the moment, though, in today's trading, as we move it down into a 50-minute chart, we are a little range bound, as you can see, because the Eurusd dollar is moving down, and I'm sure the dollar yen's moving up. So this has got nowhere to go. So it isn't able to get up to 159.75. That would be a great level to look to trade at, because it's that weekly head and shoulder level. Up to the weekly chart, it's this high over here. So that would be where I would look. I also note that this little ranged area here, we've been up to 79% level early Asia and just been a fraction short of it in London. So quite clearly the sellers are watching up here. Now, whether or not it can get back up there, but anywhere near close to 159.70 to 75 is where the sellers are sitting themselves today. And they're also sitting themselves there through New York. All right, through that period kind of area there. So quite clearly the sellers sitting up there, quite happy to hold the market. Are we getting a major failure there over the course of time? We'll have to wait and see. All right, Euro pounds. Now, I've been discussing last week the fact that we're putting a lower top, we're trading down. So we have a lower bottom, up to a 79% retracement to a lower top, at weekly, monthly resistance, and now we're trading down. And I'm anticipating over time price may well, we've moved down, we've rallied, we're now moving down to test support. And last week I just discussed 86.09 to be resistance on any rally. And lo and behold, that's where all these day chart tops are coming in. We've been a little bit above 86.09 today, but we're below it again. So it's rather consolidatory through here. So last week's high up here at 86.20, really from 86.09. His weekly resistance up to 86.20 is where the sellers are. Right. That's the area we're looking, if you wanted to trade this pair, to look to get short for the continued move down. So this may come up. This is the 50-minute chart. If you draw a fib from the current drop, it may come back up again, but you could be looking at this area up here, 86.16 to 86.19. Retest back into there, just underneath last week's low. Sorry, just underneath last week's high. That's clearly where the sellers are sitting, holding the market. And the overall weekly trend there is down. So my bias would be to identify where the sellers are and look to try to trade a reversal down from that area. All right, pound dollar. All right, it's moving down. I'm a little bit annoyed with the pound. I was trying to get short up here yesterday and it never quite got up there. Now, of course, it's been moving down. So this is the major range that I've been working to the weekly chart. This is the same movement down on the euro dollar. Then we've been moving back up. Yes, on here, the weekly trend is up, but I think we're maybe stalling here at 62%. And we're actually forming this week a minor lower top at the moment. Signaling maybe, yes, we're turning the corner up there. The daily chart has put in, well, equal lows here. We do have one higher top. This has broken this little area of supports, but really any major downtrend isn't going to happen until we can break this area here around about the 126.10 level. $126.11, I think the number is. All right, so just want to move that fib over there and wait. Now, what I've noticed is we have had a 79% retracement up here. And I was hoping for another touch of that level yesterday. I had my orders sitting there at 127.80, but it never got up there. So I'm not in, and prices moved down. And really at the moment, I just dropped to the 50-minute chart for the moment, just to prove that we've done the range for the day already. So I wouldn't want to be trying to sell at the bottom of the day. I'd be looking the same way as on the euro dollar. There's the 4-hour lower top. That's the current bottom. If price keeps moving down, keep dragging it down, but look to sell the rally. Look for price to come back up to the 62 to 79% area of the current 4-hour range. Don't be getting caught selling at the bottom, thinking this is just going to keep going down, 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 because it will bounce and have a rally. So don't get caught at the bottom. Now, if this doesn't rally before hitting 126.11, it will probably bounce at 126.11. That would be a good area to watch for a bounce reversal, a retracement before the next possible decline. All right. So at the moment, if you didn't get short yesterday, it's a waiting game to sell a rally. So it's a question of waiting for a rally opportunity. And the 62.79% area is the most opportunity to look for price to come back up to. So it's there between 127.19 and 127.30, and that 20 pip area there would be the area that I would watch if we can get a rally today. Rally may not come today. If it doesn't come today, then tomorrow I would start to watch, see how we're nicely below 127. Tomorrow I would be watching to see how the market plays with 127 on any kind of rally. Pound yen. Now this is rallying from a weekly lower points, and this could come up and maybe form a right shoulder to this possible left shoulder over here, or maybe it's stalling ahead of there. Day chart though at the moment is very similar to the euro yen in that it's showing you an uptrend. It's going counter trend to the day, sorry, it's going counter trend to the weekly downtrend because the weekly downtrend is having a rally. So within that rally, the day chart trend turns up. So it's not showing it topping out yet on the daily, but if we start to see it topping out on the daily and it starts to suggest a move down, I'm anticipating that we could be looking at, that's the first sell-off. This is corrective. And then we're going that way. We'll have to wait and see how, if we can start to top out in this area. Now, I did have my fib drawn a little bit differently when I first hit this chart because I was also monitoring last month's range. So like I was showing on the euro yen, last month's range, that's the high last month to the low. And we're sitting right at 79% retracement of last month's range, which we often pull back to and fail. So we've been testing it over the last 24 hours, almost traded there today over the last 3-4 candles. Got a little bit above it yesterday. Today we're a fraction short. We do drop down to a 50-minute chart. If we're turning here, then you could draw a fib across that whole range. And the 79% level of the monthly range, the 79% level of the smaller range is quite close together, 185.55 to 58. That would be a great area to watch for the market to fail if we can get up there. Failing here to take your position for the long-term decline if we are topping out. All right, Aussie yen. To the day chart, I've been discussing this 79% level. I got short up here last week at the 79 level, 97.55 I got short at. Traded against me about, I don't know, 24 pips. And I'm looking to see if this can, that decline, like so. So I've been painting the same picture on all the yen pairs. I'm not going to trade all the yen pairs together in case, they all reverse the opposite way, but I've got them short this pair at 97.55. Traded up here when we were testing the double top area. And I use my 100 pip entry method. I'm going to stop 100 pips above. And now I'm just waiting to see if this is going to have the opportunity to release down the range. Now, if you're looking for a trade, then again, my commentary may well be the same on most pairs. is looking at the 4-hour ranges and then looking to the 62% level to 79% areas. Got the 62s at 96, 98, and the figures at 97. So that would be an ideal area just there to look for price to come back to. As well, there's an imbalance in here that got formed earlier in the day. So imbalances are often filled. So that would be the ideal area to watch for price to stall and turn back over. All right, so you can watch that. Yes, it could come up to the 79% level as well at 97.09. So this area here, I would watch if we can get up there. Aussie, if you're watching it yesterday, had a lovely failure at 67. Obviously, of course, now we're almost at 66. Might get a bounce at 66 because we've had a couple of good days of selling. May need some form of intraday correction. And I'm looking at this from the monthly scale that we've come up from on the monthly chart from a lower bottom. Are we putting a lower top here to continue down? So we're showing the weekly chart. That's the monthly move down. That's the monthly correction. Are we going like so? Ever since I got back from Christmas break, I've been saying, is this pattern coming in? I should try to get short. I've missed a couple of trades already this year. I tried to get short up here at 68.50. It got to about 68.35. So that's annoying, but just carry on. All right, so I'm looking at that as unfolding. Day chart at the moment. It's made a little minor lower top area here now. We've broken these lows. So that low just there may well become resistance this week. 66.47 on a move back up. So I'll be watching that. I'll be watching 66.47 at the moment, looking for a rally. 47. We have 66.58, the 62 level of the major range. And on the 4-hour chart, well, let's just drop to the 15. We've probably done the range for the day almost. That comes in at 65.94. So we're about 14 pips away from the low of the day. So I'm not going to sell near the low of the day, but if we could rally 4-hour range, I said I might be saying this all day today. Where's the 4-hour range? If we did pop up today, we might have to draw the fib further down yet, but that's the 4-hour top where we failed at the 67 level. 66.47, the line I put in is also last week's low, so that would be potentially now strong resistance. So I don't know if that fib is actually going to do anything for us, because I feel that now the area to watch would be just this area here, last week's low. 66.47, right around the 66.50 level over the next 24 hours, okay? Yes, you could still monitor this range in case we got a deep rally, but we may not get back above last week's low. So you can start to monitor for a rally on that pair. Very much in sell mode at the moment. And New Zealand yen. Painting a similar pattern to all these yen pairs at the moment. We had a nice sell-off on all these pairs. We've been correcting back up the initial sell. And I've got an area of resistance in here that I've been monitoring. Try to move above last week. Got just short of this area here at 9102, 9100 level. And we're moving back below the 79% level. So again, like I was suggesting on all the yen pairs, I am looking at this as down corrective down. So at the moment now we're failing to hold at the 9042 level, these highs where we had a triple top, moved above, false broke back below. So that's the key area to watch now. In fact, the key area to watch for a rally at the moment would be, it's going to move to the 4-hour chart, 79% level of the range, which is 9068. And that resistance level, 9042, the whole area there, I would start to monitor this week. And yes, you can draw a fib now across that range. And, 79% levels up there at 9074. So anywhere in here, I will be watching. Could get up to 9074 or the other 79% level, the bigger level at 9068. Let's see if it can get above this resistance area at 9043. So 9043 up to 9074 is about a 30 pip area there. What happens if price gets into that area? Can you see it turn over? Patrick, just going to read your very large message. All right, so talking about entry, let me next pair to look at is the New Zealand dollar. I'll just look at the 15-minute chart in regard to your so you're talking about 61.81. So you're currently gone short at 61.73, which is about here. Stop at 62.15. All right, I'm just reading everything again. Targeting 6100. Yeah, and you're asking me is the stop loss too wide. I just want to look at what's happening on the other time frame. So I got your levels in, and let me just have a look here. So this is at about a 50% bounce. I'd be cautious at the 6129 level in terms of, can you meet the 6100 level? Because that fib could offer a rally point. And the fact that we're range bound here, this drawing a fib from that low to high, 6154 could be a bounce point. Just for points to watch as you're moving down. In terms of where your stop should be, I think it's too wide. This area here, this little 4-hour, minor 4-hour resistance area there, I think should be where, if you're looking at where the stop should be, it should be just above here, I think. So that's at 62.03. So now if you're, well, you're at 60, what you're at 62.15. I mean, if it goes above this point here, it's probably going to come and fill this imbalance here. So that high is at 62.03. So, if it trades, if you only stop at 62.06, when we account for the spread and 1 pip above the high, if it went to 62.06, which is 9 pips shorter than your stop, really, if I think if it breaks above this high, it's going to come up and fill this imbalance here. So you may be giving away, 9 or 10 pips more than you need, but we might be splitting hairs a little bit there as well. In terms of what price action is doing right now, this outside candle that's moving down, if you had your stop above here, really, I think right now, I'd be putting my stop just above that 4-hour candle that's forming. So if we drop to the 1-hour chart, initially I was just talking about this area here, but really this is going to be a 1-hour lower top here. And that 1-hour top there is opposite to this inside 1-hour top. So really, if you want a tight stop, really could have you stop just above that high there. So that on the 15-minute chart is just above there now. That's just rejected up there. If price was to move above that high, it's probably going to come up and test this high here, which is the 4-hour area I was just discussing. So I mean, it's up to you what you do, but I think so. You're short at 61.73. So you're actually up nearly 15 pips. And this area is 61.80. Really, there's a question here at the moment whether or not you maybe want to get the risk out. Because I think if it comes back up above your entry point, it may well be reversing higher up the range. That's the way how I would start to read things at the moment. Because it's putting in little areas of resistance as it's moving down here. So if it breaks above, a minor area, it could be moving all the way back up the range. Because on a 4-hour scale at the moment, that's the last major top on the 4-hour chart here. So if this was to put any sort of bottom in, it would then come all the way back up this way. So, because don't forget, we were in a range here of sorts, and we're broken below. All right. So any rally is going to come up at least test this area. And you're really selling at the bottom, very close to the bottom of the move maybe. But only if that can get down to 6,100 without having a bounce. So you can, take into account what I've said. But I think, dealing with this range here, if I was looking for an entry point, I would be looking up here, past tense, to trade this break. I don't tend to trade underneath the break because we tend to come back up to retest or have a rally. So you just have to bear in mind, I think, that you're engaging at the moment in that maybe the bottom of a move. Sure, it can still move down to 6,100, but just in terms of its structure, you may be more engaging here in the bottom end of a move. You're not in the early stage of the move at the moment. The early stage was up here. We might be due a rally at some point. All right, so you can take all that into account and decide what you want to do. All right. I mean, of course, this is looking very weak on the day, but it is overextended to the downside at the moment. Like I tend to wait for the next rally at this stage of a move. All right, so that's my thoughts on the New Zealand dollar. If I was just looking at this at the moment, not in, I would be looking on the 4-hour chart, this whole range here at the moment, for a low to come in at some point over the next 24 hours and have a retracement within the range, and then look for a turnover higher up, personally. All right, dollar Canadian. So since I got back from Christmas break, I've been discussing the idea that we could be bottoming down here. On the monthly chart, it looks very similar to the dollar index. Is this a left shoulder inverse head, right shoulder forming? It was battling on the weekly chart here, this weekly resistance area. Now we've moved above, and already this week, that area has become support. Closed above it last week. This week it's become support now, and it's probably now coming up to target 136.54, this weekly area here of resistance. Now we've got the CPI data coming out tonight, so it's going to be difficult to trade this until we get past there, but day trend is clearly up. You've got two higher bottoms. Of course, that's a higher area. It's a bit overextended where from that bottom where we're 3 days up. And I don't like to be a buyer 3 days up because I would feel like, okay, maybe we're going to have at least a day down. But at a bare minimum, I'd want to see on the 4-hour chart some form of, so we've got a 4-hour uptrend here, higher bottom, higher top, higher bottom. Like I've been saying on the other pairs for a rally, I want to see a retracement on this pair to a 62.79% retracement on the 4-hour chart. I look to buy a dip. This is probably coming up to at least fill this whole imbalance. The actual imbalance started up here. So there's an imbalance up here that we're probably going to trade into. But I don't want to be buying at the top of the move. So I would need to see a dip. If a dip doesn't come, I just stay away and I just look. I'm always looking for opportunities to buy a dip or sell a rally. Never looking to chase price action. All right, dollar franc. It has broken back above the major monthly low over here, where we're below, so the monthly chart. False breaking now, potentially. Trend is down on the monthly, yes. Trend is down on the weekly, yes. We're false breaking this. And the long-term trend could still be down, but we may well be retracing this range back up to the 62.79% areas of that move down. So at the moment, we're just moving into an uptrend. The low of today has gotten support on that area of monthly resistance that was, so it's becoming support. So on a 4-hour perspective, I would be drawing a fib from across the range, looking for a pullback to see if a fib overlaps with that area of support. So primarily 85.52 now. The area that was being resistance, that I was saying before, sell down from that area because it could hold as resistance, which it had been doing. We've now had a switch of polarity. It's broken above. So now you want to be watching that to become support on a pullback for a move back up the range that we're seeing. So quite clearly seeing at the moment US dollar strength coming into the market. We're seeing a clear correlation. Pairs that are US dollar to a currency are moving up, and pairs to the US dollar are all moving down. So clear dominant trend at the moment for the US dollar. All right, so again, when we try and trade at the top of the move, are we looking for a pullback? Dollar yen. Now I've been monitoring this double top. Trend on the weekly's changed down. I haven't been trading this. I've just been waiting to see if this can have a nice retracement up to ideally the 79% level, or at least the 62 level. And we have a weekly resistance level at 148.80. The support level that got broken to change the weekly trend. So I'm just waiting, just watching and seeing where this is coming up to. Are we going to see a major weekly lower top form to this major, what is that? There's actually a monthly double top up here. So go to the monthly chart, you can see it. We couldn't actually trade above that high, so that's a very significant failure. Are we going to see now a significant weekly lower top form at some point, maybe over the next 2 weeks? So we're actually coming up to trade at the 79% level, back to the weekly chart of this range. So we could actually hold there, not come up as high. So I'm just monitoring at the moment to see what starts to happen at these fib levels that we're approaching. The 79% level of the major range, 146.65, which we're trading at or very close to today. In fact, we traded about 7 pips above there, I believe. Beg your pardon, no, we traded about 6 pips short. All right, so let's just have a look at the lower time frame. So you could start to monitor this price level, 146.65, just to see if we start to see a 4-hour change in trend. Other than that, I wouldn't get too excited at the moment. We could be going up to higher levels. So I'm just monitoring to see if there's a shift in trend. Are we coming up to put in a top in, which could be the lower top on the weekly chart at some point? Now, you may have a totally different perspective than me. You may be saying we're going to test the double top highs. But if that's the case, and that's your frame of mind, you just want to monitor the 4-hour chart, which is actually a low just here, is look for a pullback within the 4-hour trend. All right. You may need to keep dragging this up and look to the 4-hour and look for a pullback to the 62.79% area of the 4-hour trend. If your bias is much more to the upside, my bias, ever since we put that double top in, it has had a significant change on the weekly chart. I've been waiting for that first decline to finish, then a rally to occur, and I'm just going to be monitoring to see if the next decline occurs. I've already gotten short the Aussie yen because I'm feeling like we could be topping out on that. So if this was to put in a change as well, that would help the Aussie yen move down, and same with the Euro yen and pound yen. So there is quite clearly the leading factor at the moment is the US dollar suddenly is getting stronger. The market may have started to maybe realize that maybe an interest rate cut isn't coming, or the one that they've been factoring in as maybe an early cut in the year, maybe not coming. And so that's creating US dollar strength. And of course, then the dollar yen is going to move up with that strength. All right. And the other pairs to the yen, they could go sideways or they could move up or down, depending on, it's going to be depending on whether the dollar yen moves up stronger, then the pairs to the US dollar move down weaker. It's all going to depend on the other pairs to the yen. It's going to be dependent on that. It's like the Aussie yen, for example. The Aussie dollar is declining stronger, then the dollar yen is moving up. The Aussie yen will move down. The dollar yen rises stronger than the Aussie dollar moving down. The Aussie yen will move up. And if they're kind of equal, then those yen pairs, those yen crosses will kind of go sideways. And we're kind of seeing that today on the Euro yen. For most of the day, the Euro yen, you can see it here. It's been trading in a 28 to 30 pip range because dollar yen's moving up strongly, Euro dollar's moving down strongly, and then as those ebb and flow intraday, you get this gyration of a sideways movement on the Euro yen. All right, let's have a look at gold to finish off. Still very much range bound. Did trade down to my support area last week, and then I was been discussing this potentially coming up to the resistance area, which is the major monthly highs, these 3 highs. Can't quite get there because you see we're not quite getting up there. We have put in a lower top on the weekly, so at the moment we're just holding within the range of last week. I'm going to drop down to the 4-hour chart and just draw a fib over last week's range, which these red lines are the range. I'm just going to draw it like that. So moving back below the 79% level of the range, we're probably 4-hour lower top to a lower bottom already. We're probably coming down to retest this weekly support level. You've already missed the best entry point, which was the 79% level here and the break of this little support area. That area just there. So that area, you could watch that area to see where the price action can come back up and retest. So 2051 is the approximate area. Intraday, if we can come back up to that area, that may be, well, on a 15-minute chart, a good area to watch for a further failure today if it can rally. Other than that, I don't want to be selling at the bottom of a 4-hour candle. I'd need to see some kind of intraday rally of sorts. So moving that to the 15-minute chart. Bit of an imbalance occurring down through here. So at least looking on this range for a rally back up to the 79% level. But ideally in this little zone that I've drawn in, and really the last 4-hour tops up here. I just double check. Last 4-hour top is actually up here. So in a perfect world, 62% level of that range is in the zone that I've already drawn in. So this area here, 62.50 would be a perfect level. Assuming price doesn't move down further. If it does, you have to keep dragging the fib down. All right, so you can monitor that. So looking that it's probably coming back down to support. Now, support may well still hold down here, but if you're wanting to trade the break of support, you don't want to be trading anywhere near support. You want to be short, and then you can have your fingers crossed to see whether that can break or take profit and get out. All right, but at the moment, with the US dollar strength coming in, that gold is starting to sell off. It's looking like we might be having once more another longish term fair up at the monthly highs for the long term. All right, so that's my thoughts at the moment. Abraham, let me see what you're saying. So you want me to go through a chart and show you how I set my support and resistance levels on the monthly, weekly, and daily levels? Sure, let's just go with a fresh chart of the euro dollar, for example. All right, so I start with the monthly chart. I was looking in terms of, so what I'll do, I'll talk about trends and support and resistance. So trend at the moment, we have a low here, two minor lows here that have been taken out. So that in my mind means that the trend is actually down here. Whilst these aren't showing a significant swing points, there's two minor swing points here. So for me, the trend is turned down on the monthly. Monthly resistance is here, 110.95. We come up and held there. Monthly support is here, 104.48 in general terms. However, there is a low here that's a little bit hidden from all this price action, but that low could come into perspective, 106.35. So I would be aware of that low there. Because there's a low just there that's at 106.35 as well, which is matches with that one. All right, so I'm determined trend, I believe, is down on the monthly because we're coming up from a lower point to the last two high points over here to the left. Weekly trend is up because this is all corrective against the monthly downtrend. So we turn the trend down through here on the monthly. This is coming up as corrective on the monthly, but the trend will be up on the weekly as we rally on the monthly. We've obviously rejected that monthly high, which is also a weekly high. Drawing in weekly resistance at the moment is this high here, 110.17. Weekly support is very close to where we're at right now, 108.76. I discussed that level earlier in the webinar. Well, we could definitely get a bounce this week. Now, the trend on the weekly is actually still up because we have a higher top, higher bottom, higher top. So there is the potential that we could be holding here to continue the move up. But I'm thinking we maybe topped out up here because we're failing at monthly resistance over here. So I'm looking at the highest time frame trend, and we're filling a significant resistance level on the high time frame trend, and we're filling at the 79% level of this range as well in the same spot. So in general terms, I'm doing top down and looking at the highest time frame to determine things where appropriate. So we could be failing like so. All right. Daily. Daily support is weekly support, so I'm not going to put a line on top of a line. Daily resistance is up here, 109.98. Trend on the daily is I would say kind of range bound at the moment. That is a higher top just, but it's really equal tops. We could come down here and hold and stay in the range and trade back up potentially. But if we break below here this week, that's going to clearly open up the idea that we could be then moving through day support. I would then, if we break below 108.76, which is day support and weekly support, I would look for that to become resistance to trade down to this level of weekly support. All right, that's how we'll be looking at that and analyzing the trend on the monthly, weekly, and daily. The confusing part is always when time frames don't match up, because I believe the monthly trend is down. But what we are seeing at the moment is that the weekly trend remains up. So there's still the possibility on the weekly chart holds its trend, and that's a high. We've moved up. We could potentially hold here or just trade underneath a little bit and false break and still move that way. Still a potential for that. However, what I'm looking at is the highest time frame dominating things. So the highest time frame is the monthly, and the monthly we could be forming. I'm looking at as a lower bottom, so these two lows here and here. That could be a left shoulder. That could be a head. That could be a right shoulder here. For a long-term turnaround to trade down, and are we long-term trading all the way down to the bottom because of this whole range from high to low as well. We stopped at the 62% level. All right, if I just so that head and shoulder pattern potentially forming there in the monthly. Last year's high came up to 62% level of this major range. So we could actually be seeing now a failure at the 62% level, the head and shoulder pattern forming, confirming the reversal. And we've had that long-term move down. This has been a long-term correction over the last year and a half, maybe, for a long kind of move like so. All right, so that's how I would top down that in terms of monthly, weekly, daily, support and resistance and trends and patterns. Okay, hopefully that helped you. All right, any questions before we wrap it up? I'll just wait to see if a question comes in while I'm waiting. Just to give you a heads up, tomorrow, webinar at 8 p.m. Sydney time. I'm going to be going through part 3 of Smart Money Concepts, or Introduction 2. I'm going to talk about price and balances tomorrow night, okay? So if you want to join me, just register your interest at the webinar page. And I look forward to seeing you then. And I also have a webinar then on Thursday at 8 p.m. as well, more analysis. All right, so that's my thoughts on the market at the moment. I think you need to be waiting for some form of a rally. What's that New Zealand dollar doing? Seeing as we spent some time talking about that one. Still near the low of the day. All right, no more questions are coming in. So thanks everybody for your questions, for those that did put questions in. And just be aware, later in the day, we do have the Canadian CPI data coming out. So if you like trading Canadian crosses, just be aware of that very volatile data coming out at 11:30 p.m. Queensland time. Okay. All right. Thanks, everybody. Thanks for your company. I look forward to seeing you later in the week.